You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our L.E.A.R.N method.
Before you invest, you need to 1. Look at your financial position. 2. Establish your personal goals. 3. Assess your investment options. 4. Research the best options for you. And 5. Normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.
Hello everyone, hopefully you are doing well. So in today's video, I want to talk about the rise and increase in oil prices and some of the things that I've been hearing and seeing in terms of how things impact our economy. And of course, as things impact our economy, it will impact stock prices. Right? I'm gonna try to kind of do a summary of what I know so far. The truth is, I haven't been following it as closely as maybe I follow most things, and that's because typically, one sec here, are you not hearing me? Hold on. Can you hear me now? My microphone was muted. That's funny. You should be hearing me now, right? Let me know if you can hear me. Okay. That still happens to me after 5 years. Okay. So let me just start that over so I can just clip this off later. So welcome to another video. In this one, I'm going to be talking about the rising oil prices, what that would mean for our economy, gas prices locally, and what impacts that will have on the stock market. Because of course, as you know, everything that affects the economy will impact the stock market in some way, shape, or form. So I don't have the full picture of this, and so some of you may actually know more about this situation than I do. I've just been seeing like some cues or some signs that tells me that I need to kind of brace for somewhat of an adjustment, especially since, you know, I'm hearing things like flights are being canceled. I've seen flights, the prices of certain flights outside Jamaica increase. We've seen and heard this story, I'm sure, about Petroleum kind of, you know, lifting the cap off of the increase in gas prices and so on, right? So there's a lot of uncertainty being created about the price of oil, and so that has a natural impact on many industries, and of course, and I'm sure, of course, it's going to have an impact on our portfolios, right? So we're going to talk about it, then see how we can kind of put the pieces together. With all that said, I'm actually still bullish on petroleum stocks because I think that you know, there are some opportunities there for them, right? So of course, we'll try to look at both sides, because with every opportunity, there are potential opportunity, there's also a risk that the opportunity doesn't bear fruit. And so we'll talk about that. And then we'll just look at the 3, you know, petroleum linked stocks. That's RPL, that's FESCO, that's West Indies Petroleum. So we'll talk about those 3 and look at them at some point, and then kind of go through any articles we can find. So that's really the plan for this stream. Yeah, and just feel free to chime in where you see again that you may know a little bit more than me on this, because it's something that I haven't been following as closely as maybe I could have been. All right. So there is something that was sent to me. Let me see if I can find it. All right. So I mentioned there's an article that I got. So I'm going to look at that. Just give me a minute here. Let me get my stuff together. All right. So I'm going to share my screen and then we'll see what is there. All right. So saw this on X. I was going to say Twitter, but that's, so Richard Pandoy, you should be familiar with him. Of course, CEO of Seprod, shared this on X. This was yesterday. He's hearing that the cutting of flights due to rising jet fuel costs is now beginning to impact the Caribbean, including Jamaica. No big announcements, just quiet elimination of some routes, etc. Right? And I've also been, again, as I said, from my side, I've seen where we have, looked at some potential flights, because usually Rennie and I take a couple of trips per year, whether it be for our vacation or anniversary or wherever. And we're seeing just like some simple flights that usually cost $300 to $400 have doubled, right? And so it actually makes me feel a little uncertain about whether or not the trips that we have scheduled will actually work out. So we will see how that goes. Yeah, so that's the first piece. The next piece, I checked in with, David Rose, of course, to see if he wrote anything on it. So, he sent me this article that he wrote at, early April. So we're going to go through this, and then he sent me some of his notes as well in terms of what he spoke about on taking stock on Tuesday past. And then I'll kind of look at the stocks that we mentioned, and then I'll try to kind of piece everything together. All right. So that's kind of the flow for this conversation. So let's go through this article now. So it says fuel hikes reignite pressure on gas tax after weeks of $4.50 increases. All right. So rising global oil prices have pushed petrojam fuel costs up by about $21 to $22.50 over 5 weeks, with taxes accounting for roughly 31% of pump prices. Now, I usually fill my tank for about 11,000, around 11,500 thereabout. And for the last couple of weeks, I've had to fill my tank because I've been to Mobile a couple of times. I've done some trips, and my tank, even when the light is not even on yet, it's 13,000 plus to fill that tank, or to fill up from that point, which is very concerning for me. I mean, I don't drive a lot, but I have to drop my son to school. I have to, pick up my mom, who helps us out with our son, and so on. So I do still some driving each week, and I've always kind of felt like, okay, I'd fill my tank up, a couple times per month, maybe 2 times max. I spend, 30,000 max, if anything, and that should get me by. But now I'm spending maybe $15,000 a week, which, essentially is going to double what I'm currently spending. So that's concerning for me. So it says Christopher Berry is urging the government to cut the special consumption tax on fuel, arguing that higher energy costs are squeezing households and raising production costs across the economy. Now, I agree with that 100%. The SCT, if you remember, was placed on gas many years ago, 10 plus years ago. I remember when it was first done. I don't know if that's what started the riot, but I remember in high school, that was 20 years ago, in high school, heading home when we had the gas riots and roads were blocked and, all of that stuff, right? I don't remember if that's when it was raised, but that was a thing. But I do agree that it would put pressure on our household expenses. It will put pressure on businesses. So admin costs are gonna go up. All the businesses that are reliant on companies like JPS for fuel, for um, electricity, etc. Right. So while a tax cut could ease the pressure on consumers, it risks widening the government's fiscal deficit, which is already projected to exceed 190 billion. Which is also a kind of a valid point here, right? Because the government, of course, with Melissa, especially because it's not even just about 6 months from Melissa, and the impact that would have had on the rebuilding and the deficit, no doubt, probably widening because of that. This is not coming at an ideal time, right? And I'll talk about what I think all of this means, or how you should maybe be thinking about your portfolio as a result of this. I know I've been investing in a particular way, and I think that it's actually going to be interesting for the rest of the year if this continues, right? Because just from some things that I may think happen as a result of it, and what that will mean for our jobs, for our income, for our lifestyle, and things like that. All right. So Chris Berry is calling on the government to review the SCT on fuel products as higher petroleum costs squeeze consumer pockets. So St. Don't Refiner Petroleum has added, well, we read that already. Over the last few weeks, as global oil prices soar due to the blocked Strait of Hormuz in the Middle East. This is the part where I'm reading from. That translated to at least 14% higher prices charged to marketing companies, retail service stations, and other users. And of course, RPL and FESCO, they are marketing companies, right? So when oil is higher, their raw materials essentially go up, right? So according to Petrojam's April 1 pricing for 87 gas costing 172.38, 37.77 was related to the government's SCT, while $15 is for the ad valorem SCT. I don't know what that is. This meant that 31% of the final price was related to the government's SCT, which means if the SCT is removed, then that takes $50, $52 off of the gas price, right? To the marketing companies, which means where we pay probably $200 plus per liter, would probably pay, somewhere like 160, 170 maybe after their markup, right? So I think that the government should look at trying to put in place some policies which will offset the big increases in cost of fuel. And Bear added, in the fuel that we consume as consumers, there's a big SCT charge which hits our light bills, our fuel prices. These are expenditures that the average family can't really offset, right? Again, I agree with that 100%. And we are kind of experiencing, as it says here, a second external shock in 6 months, right? This is unprecedented times, right? The passage of Hurricane Melissa left us significantly damaged and reduced availability of rooms, which impacted the winter tourism season. So tourism would have been impacted by the hurricane, and now tourism is going to be impacted if less flights are coming to Jamaica. Because one of the things you'll remember last year, there was a big, tout about how many new flights have opened up, new routes coming to Jamaica, new routes from Jamaica to other parts of the world. All of those things now kind of grind to a halt if there is a shortage of the raw material that we need to do the thing, right? With the current Middle Eastern disruption, and this kind of tells you that the things that happen around the world, impact us day to day, right? We can't just ignore them and think that it has nothing to do with us, so we don't have to worry about it. Everything has a correlation as to what happens to us on the ground, right? So with the Middle Eastern disruption, the cost of oil derivatives and related products have begun to spike in price. The cost of fertilizer, a key agricultural input used to increase production yields, has already spiked due to the supply shock, which has cut off 1/3 of the world's seaborne trade in the input. High fuel prices have also become a double whammy for manufacturers as liquefied natural gas and electricity prices increase the cost of production, while higher diesel prices impact the cost to transport and distribute these products. There's so much that is impacted by this, right? So much that we will need to account for, so much to consider in this. So much to unpack, right? So much to unpack from there. Hold on, I'm just I didn't go live on IG, so I was just checking to see if the stream went through okay. All right, so I don't expect any issue with the availability of food. The challenge will be on the affordability. That's what Richard Pandoe said, CEO of Seprod. I've also seen an increase in, I went to just do a little run to the supermarket yesterday, and I kid you not, I picked up a handful of items and it was like $15,000. I was like, I actually said to Rennie that I thought, because I used to give her grief whenever she'd go to the supermarket for what she calls a top up, and she's spending $15,000 to $25,000. I'm like, that doesn't sound like a top up. That's a week full of groceries, but I get it because I literally I picked up things that I thought were just like, in my mind, it was like $5,000 to $8,000 max, but it was $15,000, right? And so if our input costs are higher, or our raw materials costs are higher, our food costs are higher, every single thing will become higher, right? If on a basic level, the consumers are spending more, there's less discretionary income. If there's less discretionary income, businesses will suffer. If businesses are suffering, then that whole sector is impacted. Businesses may become compromised. Businesses may fail. If businesses fail, then government revenue is impacted because of the revenues that they project to get from the business sector, and it's almost like it could cause like recession factors, right? And no doubt inflation should increase as well. And so, because I mean, we're already seeing signs of that, right? When there's talk of food prices going up, then that's similar to us seeing an increase in terms of inflation. So Seprod is one of Jamaica's largest manufacturers and distribution conglomerates. The company is involved in the manufacturing of flour, snacks, and drinks. I'll move on from that there. So crude oil prices are up 82% to US $11.39, while West Texas Intermediate crude prices are up 99% to $115. I'm assuming that's US as of Monday. Brent crude prices usually trade above the West Texas Intermediate prices due to the cost of transportation over water. The inversion of the WTI trading above Brent crude oil prices reflects the market pricing in deliverability of product to users, right? So let me kind of scroll through some of this here. So the pricing mechanism has a limit or a cap of $4.50, which is the maximum price that petroleum products can go up or down on a weekly basis. I hardly see it go down, right? But yeah, this means that the refinery will absorb some of the cost of high input prices whenever there's a spike or shock overseas. Thus, the $4.50 price increase might not match the actual $20 price adjustment on the open market. So according to the minister Daryl Vaz, the refinery had absorbed US $5 million in higher prices up to the week of March 27th. So he noted that the government might have to intervene to address the cost that Petroleum is currently absorbing. Petroleum recorded US 28 million net loss in March 2025 fiscal year and was projected to have 9.63 million net loss for the March 2027 fiscal year, right? Yeah, so I think I can stop it there. So I mean, a couple of things here, right? And I'll review the companies next. Yeah, so as I said, just a couple of things here. A lot of things are going to be impacted, and what the concern is for me is that we may not have the 1 second here. It's just now to think about the full impact of all the companies that are listed. So for example, we may see a specific increase in admin costs for manufacturing companies specifically. This is going to have far-reaching impact, at least for the quarter that was Q1, and it's going to bleed into Q2. And I mean, there's no sign or any clue as to when things may, stabilize. Certainly, you hope it kind of steadies at some point. We would love for it to go back down, but if it at least stops going up, that also helps. But that's going to create a lot of uncertainty because, of course, for example, let's take the flights issue. If airlines don't think that consumers will continue to book flights at those higher prices, then some airlines might shut down. If airlines shut down, then that cuts down the flow of travel for either leisure or for work purposes. If more people are working from home, then what does that mean for our personal expenses again at home? Because the thing that I think about there as well is, for the last 2 weeks or so, or no, for the last 2 months or so, the internet connection at home has been terrible. And we have two different connections. We have Digicel and we have Starlink. Both have been terrible. So I'm just thinking of an idea or a world where I'm working from home. I mean, I kind of work from home mostly now, but more people are working from home. Internet connection becomes more unbearable. Our business, Learn, Grow, Invest, is actually built digital first. So we pretty much run an online business that could be compromised or just change the way that we are able to deliver services. And so they're just like everything. A lot of things are going to be impacted by that, right? So I'm going to I'm going to share some points that David shared with me in terms of what he said he shared on taking stock, is his kind of summary. So he said 4 points that he shared or he spoke about. He said he spoke about the flights being canceled, which I kind of covered already. He said next point is more work from home equals less consumption. It impacts discretionary services and fast moving consumer goods. 3, higher prices for everything, right? Fuel to drive, distribution costs for distributors, inputs for agriculture, chicken, like everything, like literally everything would go up. And people will seek more cash to cope with higher prices. Stock prices might go down, right? So that's a main point that I'll probably stay on. So if stock prices are expected to go down, there are a few things that you may need to consider here, right? As things would have, continued to. So I think, or the way that I'd look at this is, it's going to be a gradual going down, but as you see companies perform worse due to higher costs, then investors will respond by saying, well, the future is uncertain, or the future is more uncertain than it was before. Prices go down. If prices go down, then that impacts, a couple of things, right? So on one side, as a dividend investor, I'm like, yay, prices going down, yields should go up. But then if companies aren't producing or having the same outputs in terms of net profits, then there's not the same level of profits to distribute. And so dividends paid will also go down, which means it's kind of, six of one, half dozen of the other kind of thing, where on one hand, I'm like, well, that's a good thing that stock prices may go down, meaning you can own more stocks that you can pretty much build up your portfolio if you're able to rebalance, the right way. But then you may see a case where it could also maybe impact persons, attraction or appeal from the market, right? So pretty much you'll find that investors will clamor to the stocks that are expected to thrive in this form of economy, or at least this reality, right? So that kind of brings me to the fuel stocks, right? So before I go through them, I'm gonna look at the three that I mentioned: RPL, FESCO, and West Indies Petroleum. I'm just gonna start by looking at how they've been trading. And then I'll kind of talk about what I think will happen maybe for the rest of the year with them, or at least for this quarter. All right. Let me know if you have any questions, by the way. Let me pause here. I'm almost at the halfway mark. Any questions, any comments on anything that I've shared? Do you agree with me? Do you disagree? Let me know. All right. So I'm going to take some questions or comments while I think I feel bad about persons on IG not being able to be a part of this. So I'm just gonna add IG stream real quick, and while I take some questions. And by the way, if anybody wants to join me on the stream, let me know. I can send you a link and you can join me live on stream if you want, if you feel like your camera ready. Yeah, we could do that. And yeah, so let's do that. All right, so I'm not seeing any questions. I think everybody is good. Let me jump back to the three stocks that I mentioned, right? So we're looking at this as the so the question that we're going to try to answer here is, what do we think is going to happen to these three stocks for the next quarter, maybe for the remainder of the year? Now, in general, we're seeing that stock prices may be going down as fuel costs continue to rise, which makes sense, right? Higher input costs, more expenses, lower profits, less attractive companies, maybe lower dividends. It has a cascading effect. On the consumer side, a lower consumption and things like that. It's gonna impact a lot of things across the board, right? Now, for these companies, with prices going up for these companies, their input costs going up means that revenues should be higher, but it's a balancing act, right? Because let's say that revenues increase, assuming that the volume is the same. Because with marketing companies like RPL, FESCO, the volume or the liters sold is what you want to watch, right? So if the liters sold is the same or increasing, then revenues go up, profits go up. If liters sold decrease, revenues may still increase slightly due to the share increase in price, but then profits may not be the same because they may not do enough volume to compensate for that increase or that rise in admin costs. That's really the middle of the equation that we need to look at, because they may have a higher top line, but it may not necessarily translate to more profits. And I'm talking about the three companies here, not singling out anything here. Sean says, Regency, in his opinion, will take a big hit because of their small margins. Well, we don't know if they may change that policy now, because it is something that they've said a few years ago, that they try to keep their markup small, their margins small, etc., etc. But it depends on how you look at it, Sean, because their smaller margins may lead to lower price. Their lower price may actually lead to more volumes being sold for them. More volume sold could mean that they can maintain or grow their revenues and profits. So it kind of depends on how that plays out. So it's still a wait and see, I think. It's not fully clear as to what they would look like. I'm waiting to see what the Q1 numbers look like for all three companies, because a lot of the impact in terms of prices that we're seeing is going to be based on what happens March, April, etc. Right? So it's going to touch on Q1, it's going to impact Q2. So in a couple of weeks, we'll know, right? All three companies should be reporting their Q1 numbers, and then we'll kind of see, right? So Levain says precisely. So it's kind of trying to figure out where they will sit, and it really depends, right? Because different strategies can allow you to see growth in this market. I think if they're slow to react to increase their margins, it may lead to more volumes being sold. Because whereas in the past, when prices were low or lower, persons could really take the opportunity to buy gas out of convenience. But I remember a few years ago where persons would go out of their way to save money when they're filling up their tank, because I know some persons may have the option to work from home, but not everybody would, right? A taxi man would not be able to work from home, right? His job is to drive. And so there are still certain sectors that will not have a choice but to continue to buy gas, to continue to work. If somebody lives out of town and is working in Kingston, they need to travel, and vice versa. Different things like that. So I think whereas a certain percentage of the population can afford to work from home, that's still going to be a very slow transition, because we do not have a work from home culture. We have a culture that a manager wants to see their employee working, especially in government, which is the largest employer, right? So Rico says, I feel like as soon as there are oil speculations, the petroleum industry is extremely volatile. You don't always know exactly when to buy or sell. Yes. So volatility is actually a good thing. Volatility is how prices increase. Prices increase, that's how we make money, right? So we don't want to shy away from the volatility. We don't want to be fearful of the markets either. We don't want to fear the uncertainty. What we need to try to do is understand it and position ourselves to benefit, because regardless of the state of the economy, the stock market will have some companies that do well, will have some companies that don't do well. So as an investor, you kind of have to position yourself as best you can. And this is where I think keeping a light portfolio would help. So for example, I think, again, this kind of goes back to my philosophy a few years ago, where I say to people, I don't think as an investor you should have more than 4 to 6 stocks. Now imagine those persons with 20 stocks, 25 stocks, 30 stocks, and you are having 30 stocks in your portfolio and 10 of them are manufacturing or are in an industry that's heavily impacted by fuel prices. And now next quarter you have a bloodbath because a third of your portfolio is down significantly, right? Even more than it was down before. So this, I think, more than anything else, is the reason to have a light portfolio, to not be having too much dead weight. So there's this thing that we discuss in level 2 where we don't want any dead weight stocks in our portfolio. And so you really have to consider what you're invested in, how you're invested, and how you can kind of take advantage of what's happening, right? Let me see here. Persons are about to realize that they only needed 87 and not 90. Never understood why people love 90 so much. Sir, be careful. I have a brand new car. I buy 90. It's a 6-year-old car. I used to buy 87 for my previous car, but my wife, who worked at Petroleum at one point, tells me to buy 90. She worked in the lab where the fuel was being mixed, and she says there's a difference. So I trust her to know that there is a difference, right? I wish she was here right now to explain further. Sean says shorting would be nice right now. That would actually be good, actually. I agree. It would be great to short stocks, especially after things like dividends are being paid. So, the stock price going down and things like that. Shorting would be a great addition right now, JSC. I agree with you, Sean. I know you want to short Dolphin Cove, right? Almost $30 markup between the two at some locations, savings right there. Exactly, right? So right now I'm not necessarily watching it. And I'll tell you why. I have a confession to make there. So do I want to confess this? No, it's a Friday night. I'm not confessing anything on a Friday. 90 lasts longer than 87. I don't think it's a lasting. I think it's more of the blend and the impact on the engine. That's my understanding of it. Renee can tell me if that's the case, but that's how I think about it. Sean says if I could short Dolphin Cove, I would retire and go to have brunch with MLC. What's an MLC? I don't know what that is. Can you explain what MLC means? It's send it to dear pastor. All right. Let me leave that alone. 1 in a million, Marsha says nice shirt. Thank you, Marsha. I bought this shirt at a church. I don't remember the name of it. We visited a church in New York a couple of years ago, and they were selling these shirts. It's one of my favorite shirts, actually. Can't remember the name of the church though. But we're t-shirt people, right? We love t-shirts. It actually reminds me that we're gonna be building out some Learn, Grow, Invest merch. We have a ton of ideas for shirts and stuff that we want, but then we can't make the shirts now if everybody's gonna be working from home. If you're working from home, you won't want your t-shirt because you're not gonna be going out on the road to wear it, right? MLC means Michael Lee Chin. Who is that? Who is that, Sean? Is that somebody? Is that somebody I should know? Jeremy now is getting people expectant of his convictions and he leaves us. That's not true, Nicholas. I was gonna say, all right, let me keep my word. So I was going to say that rising costs, I think Renee and I have finally found a sweet spot to managing our money, to budgeting, to managing our income. So right now, the debts that we have are maybe about 20% of our income. So our debt service ratio is pretty low, right? Which means we have a certain amount of disposable income each month, right? We have one mortgage, one car loan, that's it, right? We've cut off all other consumer debt. We have a credit card, but that credit card is managed reasonably well. And we have resisted to take on any additional mortgages, any additional car loans. It's been very tempting, right? Especially with all these new cars and stuff that people are flaunting, and opportunities to buy houses and stuff like that here. Because if anybody in the bank looks at our income, they'd say, yeah, man, you guys can afford at least one or two more mortgages, and we're like, we don't want any debt. And we've had that stance for at least the last 2 years where we're not taking on any new debt. So whenever we're in a position to take on debt, we 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 process it, we resist the urge, and so we've been able to keep a certain amount of liquidity, which helps us. So we're not. I remember when we had the apartment that we bought, our first investment property, that stretched us in terms of cash flow because we were renting at a deficit. So mortgage was 150, we were renting it for 95, and plus we had maintenance. So we had a gap of about, I think, 50, 60,000 per month. Plus we had cess, right? So we were seeing that we had to, find extra cash. So then we were like, let's just sell that apartment. We netted a few $1 million. We just simply we wanted to keep our expenses low because there was a lot of uncertainty at the time. And so that's why we've been able to invest so well over these last couple of years. And I think us having more cash, staying away from debt, increasing our investing has accelerated our wealth significantly, right? So that's what I was going to confess, Nicholas, that I'm not overly concerned personally because we have room. Now, if you don't have room, then I would understand. But that's what we've worked hard to create, right? So even with 2 kids, we still have a certain amount of room in our budget. And that's because we have been aggressively seeking to grow our income, right? So, and we have thought about just clearing our mortgage, clearing our car loan, but the car loan that we have is really low now in terms of monthly payments, and the mortgage is under 100,000, which is a dream right now. So we have 20 years left on the mortgage, 4 years left on a car loan. So the car loan will end soon, and then it will just be the mortgage. We're in no rush. Right? That was a very long-winded confession. So, yeah, you asked for it. Can't wait for LGI merch. Don't worry, we will be digital gurus after your conference. All right. Debt-free is a way to be. I have to think long-term and hard before taking new debt. I mean, yeah, I said this at a conference that I spoke at last weekend, that the world has positioned us to treat our dreams and goals as if they can only be met with liabilities. So from we were babies, from we were in primary school, they told us that the way to own your dream home is with a mortgage. And I tell you that the way to own your dream car is with a car loan. The way to go to university and further education is with student loan. So the world trains us to take on debt to accomplish things. And so we don't really have patience as a people, because the minute we aspire to something, we want to tie a loan with it. We want to use a loan to get it faster, right? And so it creates this society where the banks make billions of dollars off the economy, because when persons are working, they're earning income. A lot of that income is going into debt repayment, and that's how banks make a significant chunk of their money. So the banks aren't interested in a debt-free society. And that should also explain why banks aren't necessarily the first people to take on, financial literacy initiatives, right? Because if people are truly financially literate, they will take on less debt. If they take on less debt, banks make less money, right? So just kind of, explaining that. Now, does it make sense to take a mortgage at some point? Yes. Does it make sense to maybe take a car loan at some point? Yes. But if I'm selling you a car, then the answer to all your problems is a car, right? I'm not going to say to you, well, maybe a car is not the right thing for you now. Save up for a couple of years, increase your income, then come back and buy this car. No, I'm going to tell you to buy the car, right? And then finance it. Right? Sorry for that mini rant there. No new debts in these times unless it's life and death. Okay. Do you think an 8-year car loan makes sense? No, I don't. I don't. And I'll talk about that another day. I'll do a video on this, Rico. I'll do a video on good debt versus bad debt. And we can talk about it. They don't want you to know, best believe that. Yeah, man. I mean, it's not in their interest to really make people financially literate. If we were financially literate as a people, they would have to change their business model, right? What's your take on pledging stocks? I've done it before. I don't see an issue with it as long as you understand the risks that are associated with it. So just take it on cautiously and understand when you pledge stocks, you can't sell them unless you can't pull cash from your portfolio unless those things are cleared. All right. So all right, let me stop diverting, guys. I apologize. Blame the chat. All right. So for the last 3 months or year to date, RPL is up 11%, right? It was certainly higher. I remember it being higher, especially at the start of March when they announced the QPR launch. So we saw some growth there, and then of course it would have corrected. We're waiting on Q1 numbers, but we saw their numbers from last year, and they certainly would have seen growth, right? They did their highest annual profit to date, right? Look at this difference here. Their Q4 is usually 6, 3, 24, and they did 25 million profit in Q4, right? So that was significant for them. This is 67 million, 92. I think they did 108 million in total, right? So great year for them. And so Q1, where they usually do 50 million, last year they did 33. I think last year they had to pay for Spanish Town. I think they had some costs coming out of that. So I think we'll see some recovery for the Q1 for sure. I actually think they should do somewhere between 40 to 50 million in Q1. And I'll tell you why, right? Because I'm going off of these numbers, right? Because this was, I think they had a specific expense, because you notice the rest of these are above 30. So let's say 30 is the baseline. We have QPR sales, which have not started yet. They're building out that factory. But they now have stations that are on stream, and they did the Yardman acquisition. So I think the Yardman acquisition will add to their profitability. So I'm expecting they'll have their highest profit in a quarter. That's my estimation, because if they did 36 last year Q2 without that acquisition, I think they'll see that. So if they do 40 million at least in profit, that's on track to do 160 million for the year. That would be about a 40 to 50% increase on what they did for 2025. So that's before, of course, any impact to gas prices, oil prices, etc. So I still think that RPL will have a good year. We don't know what the ultimate volumes may be that they will sell, but RPL, I think, based on them increasing their footprint, how they've been building out them managing costs, etc. I think the acquisition came at the right time, because since the acquisition came when it did, that's a product that if you're home more, that's actually going to sell more, right? And then that builds out their LPG business some more, right? So that's what I think. Because if they do 8 to 10 million per quarter from that, I think the acquisition was, I think, announced the last month, so maybe you don't see a big jump, maybe a 5 million or so, but I'm thinking 40 million, right? But we'll see. I might be wrong. So I think for the growth that we've seen year to date, at least their Q1 numbers should be good. And so I think at least in a short term, before we see a massive kind of, I think it's going to be ultimately a lagging effect on what's happening in terms of oil prices, gas prices, in terms of their numbers, right? I think if any impact, we'll see that for Q2 and not Q1. And we're not going to see Q2 numbers until August of this year. So, right. So I think that's what I'm kind of expecting for Regency. For Fesco, Fesco, I think, had a massive quarter, massive Q3, right? So Fesco, if you remember, went up to almost $5 about a month ago. And then, of course, it would have corrected and corrected hard, right? It barely went back up above where it was before, right? So year to date, it's up 17%. A quarter to date, it's down almost 10%. And this is what I wanted to talk about. I think they had their most profitable quarter ever, right? So that Q3, 242 million. So you notice the difference, right? RPL will do about, 25 to 35 thereabout. Fesco is doing, over 139 million per quarter. But of course, the footprint is different, right? RPL is still early out in terms of their build out of stations. Fesco is a little bit further, right? I think Fesco is at 22, 23, 24, somewhere around that number in terms of stations now, versus RPL, which I believe is between 4 or 5. I can never remember exactly. So it's a different business in terms of scope. What that means, though, is that I think they will just have different considerations. If anything, the impact, if negative, would be greater for somebody with more stations, right? So if there's a negative impact, we may likely see it more on Fesco side than on RPL side, if you get my thought process here. Humble Boss said Fesco is at 28 now. Okay, so that's massive, right? 28 stations, and knowing Fesco, they're still going to continue to build that out, right? So I think their Q4. So wait, how come we didn't see their Q4? Did they do their audited numbers or something? Their Q3 ended December 30th. Okay. I think they're also waiting on their Q4. Okay. And they did announce the dividend last year. Okay. 2 cents. All right. Let me leave that alone. Let me leave that 2-cent dividend alone. All right. Marsha is asking, what are your thoughts on TJH USD for long term? I don't see an issue with that. Just understand that the level of liquidity for the TJH USD is not the same. So as long as you understand that impact of the liquidity on it, then I mean, if that's what you're going for, since you said long term, then you are not going in it for something short term. You're not going in it and try to flip. I don't see anything wrong with that. You can also fill out the US dividend mandate and get your dividends in USD as well, right? So there's that. So I really think that Fesco will of course, they're gonna close out the year very well for last year. I think that yeah, so they did 55 last year. I think they're certainly gonna beat that number because they're doing pretty much again 139. So let's say they do somewhere like 150 or even 200. If they do 150, then that would be almost what, 700-800 million in profit for the year, right? So that next dividend that they announced, I'm thinking should hopefully at least let me, of course, I'm very concerned about the shareholders' dividends, right? 2.5 billion. That's a lot of shares outstanding, by the way. times 0.028. So they paid 70 million in dividends. Fesco, you can pay more than 70 million in dividends now, right? So if they do a massive dividend, let's say they do a I was gonna say 300 million sounds like a good number, right? I need to check what their dividend policy is. I don't know if they had it in their prospectus. Fesco dividend policy. Does anybody remember what it is? Their dividend policy says annual dividend of minimum 25% net profits. Okay, cool. Right? So 25% net profits. If they do 139 plus 205 plus 242 plus, as I said, about, let's say they do 200 times 25%. That's 196 million. That's a 3 times dividend, right? So 196 million. If they do that as their dividend, that would be a 7 cents per share. 7 cents per share would give us a yield of 2%. So still a pretty low dividend. But I mean, the point is, it would appear to be a significant increase in dividend compared to what they've paid before. I think that's what the market would resonate to. So let's say they get ambitious and do like a 10 cents or something like that. I think investors would respond very favorably to that. Levine said 9% if pulling from what. If we compare all dividend yields to IPO prices, then I mean everybody's dividend yield would look good, sir. So I'm not giving you that one right now. But my point being, I think for Fesco again, I mean 28 stations is a significant footprint. They've done, their next report will be good, and their Q1 might see somewhat of an impact, but I don't think it will be significant enough to impact their price, at least in the short term, because I do think at these current revenue and profit levels, the stock would certainly be undervalued. I don't know what the PE is right now. I'd have to check, but I'm sure it's certainly trading at a much lower PE than it was back in 21, 22 when it was trading a lot higher. So I think Fesco certainly would have some opportunities to see some upside, at least in the short term, and until again we see maybe that impact on, maybe lower consumption, lower margins due to increased prices, that kind of thing. So Fesco is one of them where, based on the scope of the company, I'd be looking to see what the admin costs look like, how it will. I mean, I'm doing this for all of them, by the way. For RPL and Fesco, where looking at the admin costs and how those are managed, because of course, if their raw materials increase, then we could see something from that, right? So operating expense. So this is a number that I'd be watching, right? This line item. All right. So so the operating profit, because that is gonna set the stage for the rest of it. All right. And then the final one here, which I mean, I'm not even sure if I should look at West Indies Petroleum, because I don't think it's gonna impact them in the same way. Increase in I don't know if the increase in oil prices would impact their business, because they're doing things like storage, etc. I don't see it impacting them in the same way, but it's certainly worth noting since they're in the space. So that's how I'm kind of thinking about it, right? So you guys can let me know what you think. Hold on. All right. So yeah, I lost my train of thought. On track for 28 this year. They just opened one in West. Oh, interesting. Open one in Westmoreland. I wonder if it's that one. Um, okay. All right. Congrats to them. So they invested 30 million. Who is this? Who is this one for RPL or FESCO? Let me know. All right. So we're at the hour. So let me know if you have any questions. I can stick around for 5 more minutes to answer any questions that you guys may have. Let me know your thoughts, right? Let me know, what do you think will be the impact of rising fuel prices? All right, so I'll put that up on the screen for a minute or two. You can let me know your thoughts. I'll take some of those comments, and I'll just say that, I mean, if anybody wants to meet with me, talk about your investment strategy, get some, guidance on how to navigate these uncertain times, that's what our level 2 community is for. Level 2, we teach you how to invest and understand how to build your own portfolio, that kind of thing. Let me actually play that level 2 video right now while I wait for persons to share their comments. Let me do that and take a short break.
Does this sound like you? You bought into that IPO they told you was a good investment, and now you're down 20, 30, maybe even 40%? You try to buy the stocks they talk about in groups or on social media.
You've even taken a chance on the ones your advisor sends you via email.
But after 2 years, that IPO, that stock is still down.
There's a clear difference between investing and making a good investment decision. So if you're stuck, what you need to do is learn how to invest the right way.
In our Learn Level 2 program, we teach you how to build a $1 million investment portfolio. To make money investing, you need to know which stocks are right for your investment strategy, know when is the right time to buy and sell, and know how to build the right portfolio for your investment style. This program will help you invest meaningfully while making money. When you sign up, you'll get monthly guidance on how to invest and make money while doing it. You'll have a community of investors on the same journey as you to support you, and you'll have resources to help you stay on track. Join our 2026 cohort so you can get back on track with your financial goals. Yeah, I'm just seeing a post that has me. Yeah. All right. I'm seeing 2 questions here. Can you give me a strategy to quit my job? Sean, message me. I can help you, sure. I do some, it's not something I charge for, but I do some, career coaching. I definitely do business coaching. So I can help you. Just message me on Telegram, Sean, and let me know what you do and I can help you. All right. What do you think about Kintyre? I have no thoughts on Kintyre, Christopher Green. Not a company I track or pay attention to any details of. The only thing that I will say is that I think that I'm not fully sure the strategy for growth for the company. I think that there's some noise around the company that as a potential shareholder, I would be kind of concerned about. And that's all I'm willing to kind of say about it, because I don't know the company well enough, honestly, to give you any other take, on it. But yeah, when the company was I saw a path for education, for growth. I mean, that's the space we're in, for media, for digital services, etc. So for example, the Visual Vibe acquisition I thought made sense, because that to me
could have enhanced the previous model, right? So if you have something that is focusing on screens, reaching people, content could be shared there. You could sell airtime and content for some of your courses like that. There's a lot of opportunities there, but from my understanding, the company has gone into so many different things that I'm not sure of the identity for the company anymore, right? I can't see the path, right? I don't understand the vision, I don't understand the strategy, and so it's not a company that well, I guess I'm kind of answering your question. So I don't know if that was helpful for you or not. You can let me know. I believe a lot of persons are already adjusting their gas bill, spending on the amount they only need. I expect volumes to decline. Not sure how much. I don't think it will decline in the next quarter. I don't think it will decline. What are your thoughts on tech-related stocks on JSC one GS, etc.? One GS is not a tech stock. One GS is an agency that provides services, right? So marketing, media, etc. I don't consider them tech like I do one-on-one, like I do Edufocal. So one-on-one and Edufocal I'd group together. One GS I would put separately. My thoughts on OneJS, I think they're in a good industry. The only concern I would have for them is actually the same concern I have for the companies that I looked at, which is management of overheads, right? Admin costs. They have a specialized skill set business, which means for the persons on the team, the service providers, the SMEs that they have, you have to pay them well to be able to retain them. And so that can sometimes maybe eat into the growth. Now they've been building out the company, which I think is a good idea. They did the acquisition, but just understand that they're building for the future. When companies make that type of investment, they're building out for the future and hoping that they can be in the market long enough to start, clients start recovering, clients start spending more on marketing, spending more on media, spending more on services, that they can continue to match the rising costs for staff and all of those things that come with that, and grow the business, right? So I look at OneJS similar to like a lab, right? So OneJS and lab I would put together. And one-on-one and Edufocal I'd put together. Now, I think one-on-one has pretty much sorted things out in terms of I have a clear picture of where that company is going, similar to what I was saying where with Kintai, I'm not sure. With one-on-one, I'm sure, right? The path I think has laid out pretty clear for them. Yeah, I think one-on-one is I think one-on-one is in good shape. They probably just don't there's some things that I think they could do to have maybe a better impact with how the market views them or their investors. But I mean, that's for each company to decide how they engage with their shareholders. And Edufocal, I'm honestly not sure. I think they just released their 2024 numbers, their 2024 annual report, I think. But I mean, I reached out to Gordon for an interview. We haven't been able to do it. So that interview is what I was waiting on to kind of give me a pulse on where the business is at, because I know they've made some pivots and changing their direction, etc. But I haven't been able to track the company because of the unavailability of the numbers, right? So hope that helps you, Sean, in terms of my thoughts on that. Right? For the manufacturing sectors, a few companies will still earn quite a bit, especially those aiding in recovery. Yeah, I agree with that. How do you think prices will affect TJH? Not sure if you've talked about it. So let me Let me think about that for a few minutes. And Cygnus Investment USD preference share. That's Marsha asking again. Cygnus Credit Investments USD preference share. I'm not a preference share guy, Marsha. So that's a personal decision. Preference share is giving you fixed income. So if you're comfortable with the returns, again, that's for each investor to decide. Chris says yes, it was helpful. Great. You're down 38%, which is a lot. So you're thinking of selling. Christopher, I'd ask you why did you buy in the first place? Why did you buy, Chris? What made you attracted to Kintyre? Answer that question for me. Do I think gas prices will affect TJH? Gas prices affect TJH? I don't know. So they are predicated on increasing traffic volumes. Now they have a lever to pull, which is their pricing, right? I think they have the opportunity to raise prices each year. Again, I don't think they may do that this year because of everything that's happening, but I think they have the option to. Now they had a new leg that opened, which should, I think, compensate for any lower revenues that they might have. I think their Q1 numbers would be solid. I think their Q1 numbers would be very good. And so I would say it's yet to be seen. So I would say not immediately, I don't think. But I would look to see what the traffic numbers are, right? Now that you mentioned Trans Jamaica though, Sean, I can share. I mentioned it on the last stream. I wasn't able to fully share at that point, but I can now. So what I was not able to share last time that I am proud to share now is that, let me bring it up. So the annual report for Trans Jamaica Highway, the one that was released just this morning, was done by yours truly. Well, not by me, but Learn, Grow, Invest. Our team was integral in the preparation of this report that I have on the screen. And so very, very excited about the fact that we were able to help them complete this report. And so that's what I was saying before, where because we are working with them now, I just have to, be very mindful of on the personal side, we of course will have certain obligations as to how we as their partners, how we engage with, how we, trade the shares, etc. And as our clients, we, so we'll hopefully be supporting them in the same way we support like RPL and some of the other companies that we work with. So I'm very, very happy with this. I won't tell you which sections I worked on personally, but I thought it was well done. I think everybody's happy. So look through the report, please, and let me know your thoughts. This is very annual report is not easy to make, right? A lot of details, a lot of moving parts, a lot of revisions. But I think we like the finished product, and so I look forward to building on from this. All right. So I think TJH will actually earn a bit more, and here's why. The other routes are longer and the roads are bad. It's likely cheaper to take the toll and save. Exactly, actually. That's very true. That's very true. I like that. Good point. Lanesra says, if work from home is implemented, that will affect TJH, but wouldn't be surprised if gas prices start trading down before that. Lanesra, I think you and I are thinking the same, where I'm hoping that the impact of this will be short term. And maybe there'll be recovery before we see any significant impact to a company like that. I think TJH will actually earn a bit more, and here's why. I think I read that already. Sean. Yes, Sean. So very like, trust me, it's I think at again, I may be biased here. I think this is one of the best reports that they've put out. Not just in how it looks, but level of detail and the things that would have gone into it. And I must say, I have an appreciation for how they want to provide clarity and details to their shareholders, right? Trust me, the company cares a lot about the information that they're providing to shareholders, and there's a certain level of transparency and clarity that comes with how they do it. That I mean, if I was a fan of the company before, I think I'm even greater fan now, just based on just how much more I know of the company going through this process, right? Lovade says after years of championing them. I mean, it's so interesting, right? Because one of the things that we've always said is that we would not actually said that no I'm going to do what Nicholas said. I can't share that one. Maybe at the next level 3 meetup I'll share that. So proud of the growth of this channel and company. I mean, it's we've taken some steps for sure, right? Taken some steps for sure. All right. So I think again, we encourage you to go through the report, read the annual report. I'm actually going to do a video on how to read an annual report. So this looks like a great one to use as an example. So you can look out for that video. But yeah, I think it was well done, if I do say so myself. Seriously, can't wait for the data. So interestingly enough, Sean, on our team meeting today, we actually spoke about the same thing, right? We spoke about is the first time we spoke about an IPO for LGI, and I didn't see Renee's face made up, right? Because usually when we speak about IPO, Renee's like, she doesn't see why we need to IPO and all of that stuff. She has her reservations, I would say. And I mean, listing, because we work with listed companies, we know what it entails to list, right? It's not a simple process. So yeah, right. Thank you. This alone is convincing me to invest even more. I mean, so I would say, so one of the things I've found in the companies that we've worked with, whether it be earnings calls, interviews, because I mean, when we did the interview for Kingston Wharfs that we aired on our other channel, it gave me such an appreciation for what the company does, where they're headed, how solid they are. And so it made me appreciate that there are more solid companies than we may give our market credit for. And I think that a few of the companies that we work with are significantly undervalued. And the more I work with companies, then the benefit we have is that we get to just have a deeper understanding of how they operate, because we pretty much had to comb through every single detail of the company to put into the report. So it gives you an appreciation for what comes with each company, right? Honestly, I was watching a stock analysis and it was mentioned that one of the highest performing stock as 2025. I went and did a little research and saw the company moving into real estate. Christopher, he was watching a stock analysis where, right? It was mentioned as one of the high performing stocks. So there's a stock price and then there's a company. The two aren't always correlated. You can have a company that's going up in price, but maybe there's some sort of disconnect on the company's side. I mean, I don't know. I don't know if I can add anything else to what I've already said. Let me say that. Jay Hunter says Fesco has not been doing as well as they thought. Marsha says Jamaican will park their car for 20-second gas price upward. Listen, we're a culture that really likes new cars. I don't really see us slowing down there. All right, I'm gonna wrap up the stream in 10 minutes, guys. Based on what I see, both you and Rennie are definitely are doing. LGI is gonna be at the top of my growth stocks. Always creating a problem to solve. Interesting. That NCB announcement, Lovin, just came out. Is that on the JSC or that's somewhere else? Let me know. If it is NCB Financial Group announces sale of NCB Merchant Bank. Interesting. Okay. I see the notice here. What does this mean? All right, I'm gonna read through this and then we can talk about it. Yeah, man, I'm seeing it here. I'm seeing it here. I probably just like read through this and do something on it. I mean, I'm not sure if this would make me bullish though. Because if there's, it depends if it's just a restructuring, like a sale to Garden Insurance Limited and Garden Group. I mean, if it sounds like it's just a restructuring, but I'll read it through and see. The proposed transactions are intra-group in nature. Okay, that's what I thought. Client relationship, are not expected to continue. It means, okay. So I mean, I'll read through this and see, but okay. If you think this explains the recent price movement, I figure they'll share more on their investor briefing. That's probably coming up any day now. All right. But yeah, man, and we need more data for sure. All right. So thanks for this, Nicholas. I think I kind of glossed over it, but I mean, what I will say about it is that it would be my desire, if I were to be honest right now, I wouldn't mind listing. I think it's a nice aspiration. If we were to list, it would mean our company is at a certain level of revenues, certain level of income, certain level of growth. So listing would be a great validation as to where we have brought this company from and what the future will look like. But it's a lot of work. It's a lot of work. The reporting, the infrastructure, the things that come with, setting up and running a company, the compliance, the AGMs, the annual report, I think I appreciate what some companies say in terms of the level of engagement that's required to remain relevant to their shareholders. Now, I still think that companies, it's what comes with listing, but certainly I appreciate what companies have to go through, right? So we'll see. I mean, I'm not going to set any goals or anything like that in terms of timeline, but I think we're headed in the right direction. I think we're building a solid brand and business. And so I think it's certainly not off the table in terms of where we may be headed. And I think Rennie is warming up to it, right? Top 10. I mean, I am the sole shareholder now, so we'll see. I'll do a stock split and sell you some shares. Asked my employer why they don't list, and he said listing is mostly for funding, otherwise it's too much trouble. I wouldn't say it's too much trouble, but appreciate this, Sean. You give me your money once, right? A company list, you give me your money once, and I'm obligated to report to you on the state of that money and that company for the rest of our existence. And that's pretty much a trade-off. So we raise 500 million or we raise a billion or whatever amount we raise. And for the future of that business, we're public. We have to report, we have to comply, we have to govern, we have to continue to grow, we have to continue to innovate, we have to continue to just think so far ahead. It is managing a public company is certainly different than managing a private company. And there's some data from a video that I saw that I shared in our level 3 group where it says that in the US, 20 years ago, you had 8,000 plus listed companies or companies that IPO'd, and now that number is cut in half. And so less and less companies are choosing to go public because more and more companies are thinking that it's not worth it to go public. And if you remember, 2-3 years ago, we had a projection of 50 companies listing over the next 2 to 3 years, and we've seen 5, maybe 6. So less and less companies are choosing to list, even in Jamaica as well. So it is. I spoke to a private company last year. The CEO is running a company that's doing 200-300 million in profits per year, and the CEO says his concern was that he's not confident that the market would value his shares reasonably well for what they're earning and what they can do and all of that stuff. So there is some amount of concern there, but I think it's just a part of I think when you're a company that performs, whether through dividends or through performance, then that I think it's the companies that do well are the companies that are worth let me not say it that way. The companies that do well are the companies that are able to balance all the priorities that come with listing, is what I'd say, right? I appreciate all the work that you both put into all that you do. As soon as the IPO drops, there will be okay. So you'll move from TJH and become LGI Army. Okay, I appreciate that. All right, guys. I told Renee the stream would have lasted an hour. It's lasted 90 minutes. I really thank you for your time on a Friday night. Hopefully discussion was helpful for you. Take a minute, please, and like the video. If you're brand new to investing, then I'd recommend you join our Level 1 community. Level 1 community is free to join. We have a free course that can help you to learn how to invest if you're brand new. And then, of course, you're welcome to join our community where we just provide you with support as you learn and take your investment journey. All right. Okay. Congrats to Mayberry. All right. All right, everyone. Enjoy your weekend. Level 3 members, I see you tomorrow. We have our Level 3 meeting at 7 p.m. And for Level 2, we're doing our check-in next week. All right. Have a good weekend, guys. Take care. You've always heard that you need to invest, but you don't know where to begin.
Don't worry, leave that to us. We've been teaching people how to invest for the last 8 years and have helped over 45,000 people get started with investing in a simple way. And now we've made the process even easier by creating a course that teaches you how to get started investing in 5 simple steps. And it's called our L.E.A.R.N method.
Before you invest, you need to 1, look at your financial position. 2, establish your personal goals. 3, assess your investment options. 4, research the best options for you. And 5, normalize investing regularly.
With these 5 easy steps, you can start your investment journey with confidence and clarity. But wait, there's more. We've created templates and resources to help you take action right away. After this course, you will know how much you have to invest, your investment targets and timelines, and how to invest to achieve your goals. Register now at learngrowinvestclub.com.